Okay, so our question reads, this is August 2022 question number 2B, question on financial accounting. The question reads that Grace Solo is a sole trader who runs a commercial bakery. She does not maintain proper records, but has provided you the following details. As you can see, we've got the statements for 2020 and the one for 2021. All of them are ending 31st December of that particular or of that respective year. Then we've got a factory building at cost. There's a reason as to why they're putting that at cost in bracket, because the moment they give you that, then it means that there's some information talking about now depreciation. In this case, we've got 425,000 and 425,000. Then we've got motor vehicle at cost. This motor vehicle at cost, in 2020 we've been given, but in 2021 we've not been given. And if you go now, maybe at the end of the question, you'll find that they want us to get the statement for 2021. So in this case, there could be some transaction, either a motor vehicle was bought or a motor vehicle was sold. That is why they have a question mark in 2021. They're not giving us the figure. Now, furniture and fittings at cost, 13,500, cutting across all the way to 2021. Then you've got inventory. So for this inventory, you have to be very careful. The moment they give you two inventories, one for 2020 and one for 2021. As you can see, the one for 2020 is at 31st December 2020, meaning that one is going to be the opening, closing. It is going to be the opening inventory for 2021. Then the one that has been put on 31st December 2021 is going to be our closing inventory. Remember, opening inventory will appear in our income statement. Then the closing inventory will appear both in the income statement and in the statement of financial position. The next one is account receivables. As you can see, we have the figures there. Then accounts payable, we've also been given. Then we've also been given the loan. The loan has been given there. The salaries and wages due, we've also been given. Prepaid rates, rent received in advance. Then we've got capital. Then we've got accumulated depreciation. Then under accumulated depreciation, we've got factory building. We've got motor vehicle. We've got furniture and fittings. So their respective accumulated depreciation have been given. Now we go to additional information. Additional information number 1, Grace Solo's cash summary is provided as follows. That's cash summary from on the debit side. As you can see, we've got a balance brought forward. That is could be from the previous year. We've got account receivables has been given, cash sales has been given, rent has been given. Then we've got capital. Then on the credit side, we have the accounts payable. We've got the cash purchases, salaries and wages, rates, motor vehicle expenses, bank charges, general expenses, loan interest, then loan repayment, motor vehicle, drawings, balance carried forward has also been what? Been given there. Now, note number 2, that during the year ended 31st December 2021, discounts allowed amounted to 873,000, while discount received amounted to 886,000. Then number 3, during the year ended 31st December 2021, Grace Solo took goods valued at 800,000 for her personal use. During the year ended 31st December 2021, Grace Solo took goods valued at 800,000 for her personal use. This one we term it as drawings. It will tend to reduce the figure for our capital, as well as being now put in the income statement as an expense. Being put in the income statement as an expense. Now, required. The examiner in this case wants us to get number 1, the statement of profit or loss for the year ended 31st December 2021. Then number 2, the statement of financial position as at 31st December 2021. So Those are the two of them. They are giving us 15 marks. Before we go far, we need to do workings. We will need to do workings. Remember that when we prepare our statements, we really need what we call, like in the income statement, we will need sales. This one is a form of an incomplete record. This one is a form of an incomplete record. And so we need to get figures for which will be able to help us now get our final balances that we are going to use. Now, in this case, I want us to start with the workings. It is always good to start with the workings. It is always good to start with the workings. It's always good to start with workings. It's always good to start with the workings. Just a minute. Okay, so there we go. We are doing, we start with the workings. So we start with the working one, whereby you remember that we need account receivables. In that account receivables, if we do workings, we can be able to get a figure which will adjust our figure for sales. Remember, when we talk about an income statement, we'll always need to start with sales. So we are doing workings for account receivables. So we can just have a T account here. We call it account receivables. Account receivables account. Then we'll have, it must have a debit and credit. We'll have both debit and credit. We'll have both debit and credit. Just a minute here. Let me have this first and add pages. Okay, now, so we have this. We can draw our T account. So in this case, in this T account, now if you go to, we are going to have shillings in thousands here. Shillings in thousands. Shillings in thousands. Now, if you go to our statement, what was our balance brought down in terms of receivables? Balance brought down, the one for 2021. Balance brought down. The one for 2021. Let's scroll up. What was our receivables figure? Was it 11? 11,450, this one. We start with the 11,450. 11,450. Then, did we have any cash stroke bank? Any cash stroke bank? Any cash stroke bank? Did we have anything in terms of cash stroke bank? Now let's look at additional information number one. Additional information number one. If you look at additional information number one, we have got cash sales of we have got cash. We have got balance brought forward of 1880. Then we've got account receivables of 98,810. Then we've got cash sales of 28,860. 28,860. Then we've got a rent of 13,700. Then capital of that. So in this case, Now, this amount of account receivables, this amount was actually received because this is our cash summary. This is our cash summary. They're simply telling us that this cashier, when he or she opened a book, or when he was starting the day, he had 1,880. Then kwa wale ambao walikuwa na owe the company, they paid 98,810. They paid 98,810. So in this case, we are going to do what? We are going to credit. We are going to credit our receivables account. We call it cash stroke bank. So we assume it's either they paid via cash or via bank. So just cite here cash stroke bank. Cash stroke bank, that is 98,810. 98,810. What else do you think will affect our receivables? What else will affect our receivables? Did we have something to do? If receivables, remember, it touches more on sales. So what will affect our sales? If you give a discount, if you allow a discount, it's actually going to affect our sales. So it's going to reduce our what? Our receivables. Yakomba, I'm selling this particular laptop at maybe 50,000. Then you bargain and I give you a discount of 2,000. So if I give you a discount of 2,000 on this particular laptop, it's actually going to affect my receivables. If my receivables was supposed to be 50,000, then it's going to be reduced. So what do? We credit a discount allowed in the receivables account. We credit a discount allowed. So come here and credit here, discount allowed. How much was it? Discount allowed. How much was it? Discount allowed to somewhere, not number 2. Discount allowed was 873,000. So we just write 873. Remember, we are presenting our figures in thousands. So we just write 873. Now, do we have any other figure that is going to affect this? No. So there's another figure. Did we have the closing figure for account receivables? The one under 2021. Account receivables. Yes, we had it. There's a figure that is 11,570. This one. Hopefully you can see it. Let me try to put my ruler there so that you can see. This one. That is 11,570. That is the figure that I'm talking about. Sawa. That is the figure that I am talking about. That is the figure that I am talking about. Now we can proceed. So this one will now be brought here. It will now be brought here as a balance carried down. That is 11,570. So if I take this total and I take the total on this side, they are supposed to balance. So if they are not balancing, then there is something that needs to be done. So in this case, if I add the ones on the credit side, I take 98,810. I add 873. Then I add 11,570. I'm getting 11,253. Now, credit side is more than the debit side. Credit side is more than the debit side. In this case, we just bring this figure here, 111,253. Now, what's the balancing figure? The balancing figure, just take 111,253 minus 450, minus 11,450. 11,450. So whatever you are getting, that is 99,803 being the balancing figure. 99,803, that one now refers to our credit sales. Credit sales. Zile ambazo waliuza kwa mkopo. Waliuza, yes, but they were not paid. So we call it credit sales. Remember, when we will now be computing our or preparing our income statement, we'll need to have the figure for sales. Sales is equals to cash sales plus credit sales. So in this case, remember, if you go to our income statement, in our question, there's somewhere they have given us cash sales. Have they given us cash sales? Yes. Yeah, additional information number 1. Ile item ambayo iko debited, item number 3, they have given us cash sales. The moment we want to name something to do with the cash sales, automatically kuna kitu wamekuficha that we call credit sales. That is why you'll need to do workings for account receivable so that you can get credit sales. Now, what about now for the payables? Payables, if we do workings for payables, it will help us to get if we are going to have any credit purchases. So let's see, did they have cash purchases? Yes. On the credit side, kwa note number 1, item number 2 ni cash purchases. So that one automatically tells you that pia kulikuwa na credit purchases. Zile ambazo you are selling goods to me, there's some amount that I gave you in cash, but there's an amount that I'm still owing you. That is what we call credit purchases. So you've just given me goods, but I'll pay you later. So we go do workings for accounts payable. We go do workings for accounts payable. We can do workings. We can do workings for accounts payable. So this one can call it working 2. We can call it working 2. Accounts payable. So this one will write here accounts payable. Payable account. And then I come up with a T account. I'll come up with a T account. Come up with my T account here. Come up with a T account there. This is our T account. Then we start. Remember, payables are liabilities. So their opening balance or their balance brought down will be on the credit side. So in this, remember, kama kwa receivables, balance brought down will on the debit side because it's an asset. But in this case, payables is a liability. So balance brought down yake itakuwa kwa credit side. So we have balance brought down. What's the figure? Go in the statement that in our question where we were given figures and check. There was a figure for payables, but now check for 2020. Using my ruler, I hope you can be able to see. I'm having 15,460. 15,460. Hope you've seen that. Confirm if you've seen that. Hope you've seen that. 15,460. Confirm if you've seen that figure. 15,460. Nice. So we proceed. We'll come and have it. We'll come and have it here. That is 15,460. 15,460. Then what will reduce our accounts payable? It's if they have made any cash purchases. So we call it bank or cash purchases. Ile purchase note number 2. Kwa note number 2, purchases ambayo ilikuwa on the credit side. On the credit side, ilikuwa worth how much? How much was it on the credit side? Sorry, not the purchases, but I mean the one for I mean the accounts payable, the accounts payable, the accounts payable that was actually paid. This one simply means that it was paid 57,760. So we pick that one first. 57,750. We pick that one first. 57,750. That simply means that it was actually paid. So we have 57,750. So it's either it was paid by a bank or cash. It's either it was paid through from the bank or cash. So you have 57, then 7. You 7 what? 57, 760. 57, 760. 760. So that is it. Higher. Did we have any discount that was received? Did we have discount that was received? Discount received? Note number 2. Discount received is how much? According to note number 2. Discount received, discount received, discount received. How much was it? Check the figure. Discount received, note number 2. How much was it? It was 886. Nice. So we debit that one. 886. It reduced whatever we are supposed to pay. Sawa. That is why we are debiting 886. Now, so that is it. Do we have balance carried down? Get me balance carried down. That's the account receivables now for 2021. Go to the zile figures tulipatiwa kwa question. Account receivables za 2020. I mean account payable for 2021. That is now the balance carried down. If I go here, just come here. Payables, it's 16,800. Yes, 16,800. We come and put 16,800 somewhere here. 16,800. So in this case, we are now done. We can add the figures here. Add the figures here. If we add these ones, we're going to get 6. 4 carry 1. This one is 9 plus 8. Get 17, right? 9 plus 8, we get 17 plus 8. Going to get 25. Huh? That's true. Put punch your calculator. Let's get 57,760. 57,760 plus 886 plus 16,800. What are you going to get? You're going to get 75, 446. Huh? The same figure will be here. Now, what's the balancing figure? In this case, if the debit side is more than the credit side, of which that one will always be the case, then whatever we get as the balancing figure ndio tunaita credit purchases, zile ambazo zilinunuliwa kwa mkopo. Credit purchases. Credit purchases yetu ni how much? You simply take your answer. You simply take your answer minus 15,460. So that you get 59,986. Are you getting that? 59,986. Are we together up to that point? I want to believe that is what you're getting. Those are the workings. I want to believe that is what you are getting. Let me get a Karula here so that I try to separate these workings. Yeah, that way. Yeah. That is it. We go to another working. Which other working do you think is going to be very important? Which other working? Let's look at it. Now, when you look at, let's look at our incomes, our our balances. When you look at income, rental income or rent income, they've told us there's a rent income that was received in advance. The rent income that was received in advance. Let me put a Karula here so that you can see it. We are talking about this figure. Rent income was received in advance. Then there's a, that is in 2020, 7,900. Then in 2021, that is 8,180. Now let's look at note number 1. If there's anything to do with the rent, yes, there is a figure there. That is 13,700. So it simply means that this one will need workings. Simply means that this one will need workings. Now, we go do workings for rent income. Workings for rent income. So we go do, this is working 3. Working 3, rent income. Rent income. Working 3, rent income. So in this case, we'll have our rent account here. Rent account. And have our rent. Call it a rent income account. And remember, in our for accounting purposes, we always say that incomes are done what? Are credited. So in this case, our balance brought down will be credited. Balance brought down will be credited. Balance brought down will be credited. So what are we going to have? Balance brought down. In year 2020, how much was it? Was it 7,900? Yes. 7,900. 7,900. Now, this income, remember that we also have what was received in the bank, what was received according to note number 1. So ikikuja, we credit. So something was paid. Ile ambayo ilikuwa debited in our cash book. Ile ambayo ilikuwa debited in our cash book. Note number 1. They are talking about rent here, 13,700. So because being an income, we can assume either it was paid by a bank or cash. So we can just say bank. In this case, we'd say that is 13,700. 13,700. Now, what is our balance? Balance brought down, carried down, I mean. That's the rental income paid in advance in 2021. According to the statement, it was 16. It was not 16. It was 8,180. Right? Where is it? Where is it? Where is it? It is here. 8,180. So we come here and put 8,180. 8,180. So in this case, we get the totals. The totals there. Let's get the totals. So if you add these two, this one is going to be the highest side. It will give us 21,600. This one must also give us 21,600. Now, what's the balancing figure? 21,600. What is the balancing figure? What is the balancing figure? We are simply trying to look for a figure ambayo ilikuwa received in that particular year. Ambayo ilikuwa received in that particular year. So whatever we're going to get here is what we'll take in the income statement as our rent income. So we can just write that it is going to go in the income statement as an income. Then income. Is it 13,420? 13,420. Sawa. 13,420. You know, hizi vitu karibu zote. The moment you get a statement whereby umepatiwa 2020 na 2021. Kama si cash flow statement, it simply means that you're going to have workings for a lot of for most of these entries. Sawa sawa. Going to have workings for most of those entries. So like in this case now, in this case, so you've done for rent income. What else can we do? Let's look at receivables, payables, loan. We'll also need to do one for loan. Loan will be needed. Salaries and wages will also do it. Prepaid rates. For rates, we'll also do. Rents received in advance. That one we've done. We'll also need to do one for capital. So let's go for, we can do for loan. Let's go do workings for loan. We go do, that's working 3. Working 4, I mean. We are doing loans. That is, so we can have our loan account. We can have our loan account. We can have our loan account. Now, just a minute. I want us to add more pages. Okay. So we can have our loan account. We can have our loan account. So we can have our loan account. A loan being a liability, you'll have a credit balance. Loan being a liability, it will have a credit balance, so you can have balance brought down. Loan being a liability, have balance brought down. According to that, the one in the statement, ile ambayo ilikuwa 2020, that is our balance brought down, ambayo ilikuwa 19,500. 19,500. So walikuwa na deni ya 19,500. Then if you go to our cash book, there's an amount kwa credit side ambayo ilikuwa attached on loan. Yes, loan repayment. Loan repayment was how much? Loan repayment, was it 17,500? Loan repayment. Loan repayment, yes, 17,500. 17,500. So, kama walikuwa na deni la 19,500 na cash book yetu inaonyesha ya kwamba 17,500 zililipwa, then it means we are going to debit that amount. We can say that it was paid via bank. So we debit bank, we debit a loan account with 17,500. So then we ask, because we don't have any other transaction, we get the total. Here it should be 19,500. It should be 19,500. So the balancing figure is the outstanding loan amount. The balancing figure is the outstanding loan amount. The balancing figure is the outstanding loan amount. So in this case, we have got balance carried down, which is now the outstanding loan amount, which will now be 2,000. This 2,000 is simply 19,500 minus 17,500. Are we together up to that point? Are we together up to that point? What happens to loan interest? For the loan interest, it doesn't really reduce our loan amount. Remember, The loan amount that we've been given here is just the principal amount. It's not inclusive of the loan interest. So that loan interest will just be taken in the income statement as an expense on its own. Whatever we are looking for here in terms of that one, the one for loan repayment will be the one that we've gotten as the balancing figure, that's the balance carried down, is now going to be recognized in the statement of financial position as our long-term liability. So the loan interest will appear in the income statement as an expense. It will appear in the income statement as an expense. So are we together? Okay, so now the next item, for I want us to do workings for another item. So let's do this. Yeah. So we go to working what? Working number 5. Working number 5, we can do the one for rates. Working 5. Working 5. We are talking about rates. So we are going to have a rates account. Rates account. We are going to have rates account. So for the rates account here, can have rates account. Now, in this case, for the rates are expenses, and expenses are debited. So its balance brought down. Balance brought down will be on the debit side. So can have a balance brought down. Brought down. How much is it? We had something to do with the prepaid rates. We had something to do with the prepaid rates in our income statement. Prepaid rates, we had 77.50. We had 77.50. 77.50. Then we can also have in the income statement, in the cash book, did they pay any rates? Yes. Note number 1 on the credit side, as you can see, we have item number 4, 91.40. That is an expense being paid. So we debit it here. We say maybe it was paid by a bank. That is 81.80. Now, was it 81, 91? I mean 91.40. Sorry, 91.40. Is it 91.40? 91.40. What am I writing here? 9,140. Nice, that way. Now, balance carried down. Balance carried down. The one, the prepaid rate for 2021, it was how much? It was 7,860, right? 7,860. Yes, 7,860. Now, get the total. Get the total. Total here will be 16,890. 16,890, which will still be 16,890. Now, the balancing figure is what will go in the income statement as what? As a rates expense for that particular year. Sawa will go in the income statement as the rates expense. So we can just write here income statement. Income statement. Statement, that is 903. So just simply take 16,890 minus 7,860, so that you can be able to get that. Now, which other figure do we really need to work on? Which other one do you think we need to work on? Go to working number 6. You can do workings for wages, salaries and wages, salaries and wages, salaries and wages, salaries and wages. So that is salaries and wages account. Salaries and wages account. And now salaries and wages account. That is it. Salaries and wages account. Can have it as such. Being an expense, its balance brought down will be debited. Sorry, salaries and wages account. Let's see how it was here. Salaries and wages account. It was due. In as much as it is an expense, but it was due, it was accrued. So that is why in this case we'll have to credit. Sawa sawa. So kama ingekuwa ilikuwa prepaid, then tungeidebit. But in this case it was due. So meaning walikuwa hawajalipa. What do? We credit, balance brought down. The one for 2020, the one for 2020 salaries and wages, we go up 84.20, going to be 84.20, 84.20. Then salaries and wages, kuna ile lilipo kwa cash book from our cash book transactions. Note number 1, salaries and wages. Yes, there's something that was paid. If a figure was paid, then it will reduce whatever is due. Sawa sawa. So if by that time, by the time we are opening our books, the amount due was 84.20. But now, if you check our transactions, we've actually paid, we can assume it was paid by a bank. We've paid 15,820, 15,820. What is the closing figure? What is the closing figure? What is the closing figure? Balance carried down from the balances that we were given in the extract. In our question, how much was the one for 2021? Salaries and wages. How much was due? Confirm. 8,000 what? 82.50. We can have 8,250. 8,250. Now, if that is the case, now we can get the total. Get the total here. In this case, the total is becoming 070. It will be 24,070. Now, what is the balancing figure? The balancing figure now will go in the income statement, right? The balancing figure will go in the income statement. We can simply write here income statement so that when we start preparing our income statement, that is 15,650. 15,650. Sawa sawa. So that is it. Which other working is still remaining? That is working number 7. Have we done working for capital? We are yet to do that. Can have capital. Then we have capital account. Can have capital account here. Can have a capital account. Can have our capital account there. So this is capital account. Capital is supposed to be credited. So its opening balance will be credited. Balance brought down. Balance brought down. Balance brought down. How much was it? The one for capital. How much was it? The one for capital. The one for capital. How much was it? 502. Yes, 502,320. 502,320. 502,320. Now, for that capital, did we have any transactions in terms of capital? Did we have any transaction in terms of capital? Because we did not really have the closing figure. Now, we had something to do with the drawings. We had something to do with the drawings. Then we had something to do with capital. Yeah, there's a capital. Note number 1, closing figure, capital ambayo ilikuwa debited. That capital, when it is debited, it simply means, in this case, it's debited in our cash book, simply means they are bringing in money. It's what we call director's injection. They are bringing in money in this particular business. For the drawings, that one, don't bother about it. It will go in our statement of financial position when we'll be preparing our final statement. Now, in this case, let's bring in our capital. We say now it was deposited in a bank. We can just write here bank. We can write here bank. That is 72,000. 72,250. That is it. So we add this. We add that, we get 574, 570. So this one simply means 574, 570 simply means that as we speak, the capital employed by this particular investor is a total of 570, 574, 570. So this one automatically becomes our balance carried down, the balancing figure. That is 574, 570. Sawa. That is 574, 570. So once you've done that, then we are good to go. We've done most of our workings. Now the remaining part is now just to prepare the income statement, and maybe workings ambazo zitakuwa zimebaki zile kidogo kidogo. So the next item here that I want us to have is to come up with a format. So we can have the format now in place, whereby we can call, this one is Grace Solo, this one is Grace Solo, and we are supposed to prepare statement of profit or loss. We say statement of profit or loss for the year ended, 31st December 2021. That is it. You are supposed to do that. Remember, in an examination, that one has a mark. In an examination, that one only has a mark. Sawa. So you're supposed to do that. I want us just to simply come up with the format first. Now, this one being an incomplete record, it will have both cash sales and credit sales. So we'll have our shillings in thousands, then shillings in thousands. Now, in this case, me do this first. Say shillings in thousands, shillings in thousands. In this case, we will have our sales. Under sales, we'll have cash sales, cash sales. We can denote it with XX. Then we can have credit sales, which will denote with XX again. So it will be that way. So once you have that, if we add, we are going to get what we call net sales. We are going to get what we call net sales. That is 90, we can have our XX here. So let me put it in red. Let me put it in red. Remember, we are simply coming up with the format. Then we are supposed to less cost of sales. Less cost of sales. When we talk about cost of sales, we will always start with opening inventory or opening stock. Opening inventory. Then we add purchases. Add purchases. Add purchases. In this case, I simply mean both cash purchases and credit purchases. That is cash plus credit. So whatever we get, we'll put it here. Higher. The next one is we had something to do with the drawings. So we less drawings. Less drawings. Hapa wewe mwenye biashara una withdraw some of the goods for personal use. We less drawings. Drawing of goods. So I put it in negative. Then we also less closing stock. Closing stock. We less closing stock. So whatever we get is what will be our cost of sales. Remember, this figure will be taken here. This will be taken here. So whatever we get as the answer in this case will now be our figure here. That will be our cost of sales. Hii ndio tuna less kwa hii. So if we less on that, we are going to get what we call gross profit. If we less on that, we are going to get what we call gross profit. We're going to get what we call gross profit. Are we together up to that point? We are going to get what we call gross profit. Now, the next item that you need to put in place is we are adding other incomes. Other incomes. And in this case, in our case here, we only had rent income. But some other questions, you might find some other incomes. So we bring it here. Then we also have discount received. Discount received will also be part of other incomes, discount received. So that if we add that, we are going to get total incomes. Total incomes. Going to get total incomes. Higher. Now we proceed. We less expenses. Less expenses. What are the expenses in this case? We had discount allowed. We had discounts allowed. Discount allowed. Remember now, in this case, these expenses, I just want us to bring them here, put it in negative. We had salaries and wages. Hapa ndio zile working zetu zitatusaidia. We less. We had rates. Overall, it's there. Motor vehicle expense, if they purchase a motor vehicle expense, if they purchase a motor vehicle in that particular year, like in this case, let's see in our cash transactions, they have anything to do with the motor vehicle? Yes. Pale kwa cash book, cash summary, kuna mahali waliuza, kuna mahali ambapo walinunua 10,320. Then we proceed. Let's proceed. Another one, if at all there's any bank charge, it's also an expense. Bank charge is also an expense. If there's any other expense, it can also be termed as other expenses or general expenses. So from this, now we can also have our loan interest. We had loan interest, right? Loan interest. Loan interest. You bring it there. Now from there, we can also have something to do with the depreciation. Depreciation. So for depreciation, I want us to have it as a title here. Depreciation. Because depreciation kuna ya motor vehicle depreciation. Kunaweza kuwa na ya factory building. Factory building. It will be there. Kunaweza kuwa na ya furniture or furniture and fittings. Remember, all of them are expenses. So we are supposed to less. So once we've done that, we can have our net profit. Net profit. Net profit. Are we together up to that point? So that is in a case whereby you've not been given the tax rate. Kama utakuwa umepatiwa tax rate, itakuwa profit before tax. But in this case, we've not been given the tax rate, so it becomes our net profit. Confirm if we are good up to that point so that we proceed. Confirm if we are good up to that point so that we proceed. I want us now to start making entries. That's the simplest part that is remaining. We just start making entries. That is the simplest part that is actually remaining. Okay. Now, we will have the title will remain the same. The title will remain the same as it was. So allow me just to separate this. Then I'll have this Grace Solo. This is Grace Solo. Grace Solo. This is Grace Solo. We are talking about now the income statement or the statement of profit or loss. And call it statement of profit. Stock loss for the year ended. Sorry. Yes, just to misbehave. The year ended 31st 12/2021. Then you remember to underline. Huh? You remember to underline. Then because I want my work to be a bit neat, can have this. Then have this. I'm simply underlining here. Just want my, okay, we can do without that. Yeah. So we'll have our shillings are presented in thousands, shillings in thousands, shillings in thousands. So we start with the sales. Huh? We are going to start with the sales. We are going to start with the sales. We remember we had cash sales. Cash sales. In financial accounting, they normally mark entries. Huh? So kama cash sales unakuja unaandika you are 28,860. 28,860. Then we can have credit sales. Credit sales from our working ilikuwa ngapi? Cash sales ilikuwa kwa note number 1. Cash sales. Cash sales ilikuwa kwa note number 1, right? 28,860 ilikuwa debited. Then ukienda kwa workings and receivables, we had our credit sales za 99,803. So we just bring here our 99,803. 99,803. Now the next entry. So these two, if we add together, it's going to give us our total sales, which is, or we call it net sales, which is simply 128,663. Sawa sawa. Just a minute. Know why these figures are disappearing here. So I'm saying that okay, we can simply have them here. Up here, that is 128,663. This is the summation of these two. Then we go to less cost of sales. We go to less cost of sales. Want less cost of sales. Under cost of sales, we have opening inventory. Opening inventory restock. The figure is what? 13,700. Right? Now we add purchases. Purchases. Remember we had cash purchases. We had cash purchases. So I can just have cash. Cash ilikuwa 15,640. Cash ilikuwa 16,640 plus credit ilikuwa 59. Credit ilikuwa 59,986. So if I add the two, I'm going to get, are we getting 75? Are we getting 75? 626. That is our purchases. Then we less drawings. Less drawings. Drawings ilikuwa ngapi? Drawings ilikuwa ngapi? Go to note number 1. Go to note number 1. Second last item kwa credit side ya hiyo summary. Hapo tumepatwa 11,100. But now, look at note number 3. During the year ended 31st December 2021, Grace Solo took goods valued at 800,000 for her personal use. So we take that one, 800. Sawa sawa. That is what we're going to take, 800. So drawings 800. Drawings 800. This one I put it in bracket because we are lessing. Then we less closing stock. Less closing stock. How much is the closing stock? How much was the closing stock? Was it 14,930? Yes, 14,930. We less that one. So these ones only will give us our cost of sales. Will give us our cost of sales, which is automatically going to be 73,596. This 73,596. And because hapa juu tulisema less, we are going to less it from the sales. So if we less it from the sales, whatever we're going to get is what we refer to as gross profit. So our gross profit is going to be how much? What's the answer here? Are you getting 55,067? Are you getting 55,067? Yes, 55,067. 55,067. Sawa sawa. Hi, up to that point, any question? Up to that point, kama kuna swali. Okay, if there is no question, I think we can proceed. Now that is our gross profit. The next item is the next item in this case is going to be, it's going to be other incomes. We bring on board other incomes. Other incomes. So first, we talk about rent. Rent income from our workings. Workings are rent. Workings is a rent. Workings is a rent. How much was it? It was a 13 from rent income. How much was it? 13 for 20. So we can have our 13 for 20. 13 for 20 here. 13 for 20. Another income will be discount received. Discount received. How much of the discount received? Discount received was how much? 886. So if we add that, whatever we're going to get, sorry. If we add that, whatever we're going to get is what we call total income. What is our total income? What is our total income? Is it 69,373? 69,373. 69,373. Now, can we less expenses? Less expenses. Less expenses. Now, for expenses in this case, we start with the discount allowed. Discount allowed was how much? Discount allowed was 873, right? You can have it here, 873. Put it in bracket, showing that it's an expense. Salaries and wages. Salaries and wages. From our workings, how much was it? Salaries and wages. Also rates. From our workings, how much was it? Salaries and wages, let's go and check. It was 15,650, right? This one. 15,650. We bring it here. 15,650. 15,650 in bracket. Rates was 9,030. 9,030. There was also motor vehicle expense. Motor vehicle expense. The motor vehicle expense, we had 10,320. That one is found note number 1. Note number 1, pale kwa cash summaries. Then did we have anything to do with bank charges? Pale kwa note number 1, just check in for the transactions. We also had bank charges here, 76.50. We also had bank charges. Bank charges. Bank charges of how much? 7,650. Then we can have, did we have any other expense? General expense. General expense. General expense. 37. General expense is how much? 4,770. How much is the loan interest? Loan interest. How much is the loan interest? Why not record the drawings in the additional information number 1? The drawings on additional information number 1. So these drawings, if you look at it, this one was drawing of money. This one was drawing of money. We've actually captured drawings of goods. But now for these drawings of money, this is going to appear in our statement of financial position, of which it will be reducing whatever these directors injected in our in this particular business. Sawa. So that one will appear there. That one will appear there. Okay. So loan interest is how much? Loan interest is 800. All these items are expenses. Remember to put them in bracket. All of them are expenses. Remember to put them in bracket. Now, we can have depreciation. Depreciation. Expense. So kuna ya motor vehicle. We can start with the depreciation of motor vehicle. Motor vehicle. If you go to motor vehicle, pale kwa balances zetu. If you go to motor vehicle pale kwa balances zetu, you will realize that hapo kwa question, accumulated depreciation. You realize that we have got the one for 2020, it is 2580, and the one for 2021 is 5422. Wamekupatia the accumulated. Ya kwamba wakianza mwaka iko 2580, but wakimaliza mwaka it's now becoming 5422. So what happened in between the year? What was the one for the year? We are just simply getting the difference. Sawa. The difference is what will be depreciation for that particular year. So in this case, we are going to take 5442 minus 2580. Whatever we get, that is 2842. 2842 now becoming our depreciation in a motor vehicle for that particular year. What about now factory building? Factory building. Factory building. Factory building. You have 17,000 minus 8,500. Remember, it's there. So the difference, whatever you get 8,500 becomes depreciation for the year. What about furniture? Furniture. We had the closing at 3,200, opening ilikuwa 16. So we just simply take the difference. That's 200 minus 1,600. You're going to get 1,600 that way. So once you do that, we now get our net profit. If you do those workings, what are you getting as your net profit? What do you have as your net profit? What do you have as your net profit? Do the workings. $73, 338, 7,338. That is our profit. So in our next session, we look at the statement of financial position. We can stop there. See you again next time.